Good afternoon, everybody. Good to have you back with us for our swing trading. My name is Mike Fairborn, and it's good to be with each of you today, folks. I did want to take a look and talk specifically about a dual entry system in terms of moving averages. Now, it's not what you think. It's not crossovers. It's not a moving average crossover. It's something totally unique and different, but it is fascinating because it is looking at ranges. It can provide additional indications for breakout strength, an additional level of confirmation using a moving average, still based on price, but a unique one nonetheless. And so I'm looking forward to highlighting this with you today and detailing more insights. It's going to be a fairly easy one. I'm actually going to build with you too a quick scan so we can pull these up and you guys will just see the extent of what this can do in a number of different scenarios. But with that, I would like to say hello to JV Texas. We've got Cecil, Richard, and Jay Richardson. We've got Will. How are you doing, Will? And as well mentions there, TBM, the Ben Watson. We got Ben Watson here in the chat. We've got Robert. Hello to you, Robert, as well as Life of the Fast Lane and many others. Looking very much forward to taking a dive into this and helping you guys build this and maybe a unique system that we could just, use on a more regular basis. We do tap into those, but it is kind of interesting in terms of, well, I'll let you decide on that. But for further expectations of a potential move taking place. But before we hit that, let's hit some disclosures so we can get going here. Now, this material is intended for general information and educational purposes only. Options carry a high level of risk. They're not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option has a higher risk of being assigned early. Now, we are going to be looking at maybe an option trade today. Well, an option trade today, maybe a couple, but at least one. A short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. Paper money software application is provided for education purposes only. Investing involves risks, including the loss of principal. There's no guarantee that an execution of a stop order will be at or near that stop price, and past performance is no guarantee of future results. Dividends, if we look at those, are not guaranteed. Quick look at our futures. We do look at futures charts. We do not trade futures, but there is a look at the futures disclosure right there. Futures options trading involves substantial risk, not that is suitable for all investors. All right. Well, I'm going to go ahead and just share my desktop here. And we're actually sharing it, but I'm going to pull up my charts, get that all in line. If I could just grab it here. There we go. Well, let me. Yes, it will. Perfect. All right. So this is what we're looking at here today. Actually, before I dive into it, I want to show you this. Notice that these moving averages are not a crossover. It is quite interesting and quite unique. I promise to come back to this in just a second. I want to look at a couple of different details here first. On the market itself, I know many of you are taking a look at the markets. Here is a pullback of the market right now. Sure, you're well aware of. It has been slight. You'd have to say, the possibility of a lot of times you do get the 2 to 5 days with oftentimes, not every time, but the sweet spot is 3 days sometimes. And why is it 3 days? We don't know, but there is a candlestick out there called a three soldier down, kind of like you're seeing right here. Something very, very similar to this. You never know if that's going to be the bounce, but what that can do is it can give us a heads up to say, well, if it is a three soldier down and we could bounce in, pulling back counter to the underlying trend, we're pulling against it. Could we begin to bounce here and go higher? That's the question mark. We are seeing some strength in a couple of interesting sectors here, just using a 1 week. We do like to go to a shorter term time frame here in swing trading, but we're going to compare it against the S&P 500, and I'll go full screen here. Notice over here, this is what oftentimes you'll get when you get a pullback within maybe some of the leading groups. The leading groups, although you're not seeing it this week, communication services down and technology down, and that makes sense because they are the big drivers of right there, and you can still see what we're looking at there of the S&P 500, right? A huge core component, like weighted, incredibly high in terms of the big technology stocks. What have we seen though thus far this week? And there could be somewhat of a sector rotation because this technically, folks, is our sector, quote unquote, sector rotation grid. Well, energy, staples, and healthcare, to name a couple. A couple more underneath as well. I mean, utilities and real estate, but you can see the recoveries here, right? coming up. These can be interesting areas to watch in case, because oftentimes what happens if we get a 1 week move, well, it's not too surprising if we get another week move and another week move and another week move. I'm talking weekly moves, and then, it goes up. It can start that way, although we have to be mindful that yes, we might be just in this extraordinary bull market due to innovation and productivity with AI, which is really pushing up a lot of groups. But just wanted to highlight this. I'm going to share it right now in case you don't have this one. We don't always tap into this one, but we do in this class normally. It is not a think script, but just in case, I'll just state it. Think scripts aren't guaranteed for timeliness or accuracy, but I wanted you guys to have this. Again, what's going on here, I'll just share it real quick, but it's different. You're not looking at the charts of the stocks in the S&P 500 in energy. You are, in fact, looking at how they are performing. How are these energy stocks performing relative strength? You're going to get the think script I have inside here too to give you this and just the general code for it. But it is basically, what is energy doing? E for short, over the S&P 5. Is it performing, outperforming or not on a day-to-day basis? We see this on the weekly. They can be good for swing trade rotations. Okay, so let's do this. Uh, that's it, and I'll post it into the box here. But this is, I've got to put it down. Weekly rotation, sector rotation. All right, and I have to thank Ben Watson too for this concept because he's been teaching this for years now. Weekly sector rotation and just sector rotation in general. So appreciate that, Ben. But just giving that out to our group here. Now let's dive back into what we were just looking at because I want to talk a bit about this here. This is AVGO, and you can see we have some swing trades already set up on this. And by the way, when we set those up, it's holding up pretty well. But this is one that I just a quick review. Uh, we broke above those highs, and we're still hitting. Excuse me, still sitting there at those highs. But you notice something interesting? We're sitting at the bottom of this channel line, this dual system. Folks, this is unique, and it's unique for a couple of different reasons. We're not just looking at the average of the closing prices here. We're looking at when prices break above a high level. I've got something frozen on my screen. There it goes. We're looking at prices breaking above a high price, and that is a high moving average. So we're still factoring in the moving averages here, but we're looking at it from highs and lows and what's going on there. So highs and lows. I've got this in, I should do this in lows because the lows are in yellow here. Now, a trend can occur. Think about it this way. Do we have a little bit more confirmation when we're beginning to break above the highs? Something's changing there, but now we're saying above the average highs. So it's very straightforward and it's very basic, and it can give you interesting points off of the bottom. Now, over here, as you look at this, there's a little bit of a break right here where you're closing above both of these. Okay. And it was off of a support bounce, which is interesting. We don't throw anything away here when we teach about it in this class. That would be absolutely nuts. If we learn something, we want to hold on to it. It's also around the big 300 level. So you might look for these levels here. But what is actually happening here as we dive into this? Oh, there we go. Okay. So as you can see, you're clearing above a high moving average. Now that high moving average right here is set at a 20. Now notice also I have the low at 20. So these are 1 month moving averages, but the low is important if you begin to break lower on the trend. Now look up here with me at that line. Now we are above those highs over here, but we're just gliding right on it. I'm going to look at a few of these, but this can be construed as a potential entry bounce point in the direction of the underlying trend as well. Okay. So prices closing above this level, they've got to get above both lines because not only are you closing above the low and the close and the high, you're getting those three in there for the potential move. But as you're trending up higher, sometimes you're going to get this low level moving average that can be really unique for swing trading. And I've got some stocks to look at today. We'll even throw in some options as well. Let me throw out another one here too. I'm going to make this a little bit bigger so we can actually see this. Here is Google Alphabet. Now, you can see over here bouncing, kind of range bound a little bit over here. Not too much. You're still bouncing off those highs a bit. You close above it right there off of that base. Now, this is by the way, the extension of a longer term trend that started over here, and we just kind of bounced and we began to break up. So we're getting a couple of different signals in here. Now, this is one we can actually fairly easily create in a scan too, to scan through both and to ensure that we're breaking above both of these lines. We can actually look at a trend, making sure the trend is up and the stock is even bouncing off the lower moving average. Okay, now I've chosen a 20 because I think a 20 is fairly interesting in terms of just a 1 month time frame. Remember the swing trade time frame that we look at? We look at I've said this before, a lot of times it's 3 to you know, um, 15 bars, but we've said it goes up to about a month, through to about 20. Now that's just the highest level I've got over here. I mean, I'm using this. Could we use something in the middle? Like like even on a tighter time frame, those pullbacks that might be interesting, we could use half of a 20. We could use something like a 10 period moving average, right? In the direction of the trend going higher. But it's very, very simple and very, very straightforward. I've just chosen to use the longest time frame that we actually will tend to look for on these swing trades. And this is what we're kind of looking at right here, this kind of a move. Now I'm going to just show you, I know this is like kind of a big picture, but I mean, like say for example, we're looking at, I mean, a bigger picture move, but you can see it over here. The interesting point is you could still use a 20 period moving average, of course. But we're saying, the initial sign is you're getting off the low and things might be changing when you start to just barely get above those highs. It's the high moving average and it's in an interesting spot. So real quick on the chart, just to show you where it's at, and then we're going to break this down a little bit more on some of these that have begun to move. But what you want to do, it's a little bit difficult to find. And I've not seen anybody use this before. If I'm just setting one up, I just typed in simple over here. Now I go over here to the right and let's click on the wheel. Now, what's interesting is I look at the close. If I click on the close, I don't see anything. Look at all these. I go down, I go down. Well, where the heck is it? You can see over here, I've selected it. There's a high and a low. I don't know why this is, but you have to actually go up to get it. It's kind of a little hidden outside the range. I've put the high on, I've put the low on, I've just designated different colors. I did have them originally as green to the up, red to the down, but there's just a lot of green and red that way. So I did flip it a little bit from to blue and yellow. Okay. Now, Kevin Horner being colorblind, he would say, no, Mike, you flipped it from green to red. No, it's actually blue to yellow. So my dad was colorblind, and I dealt with that a lot of my life, but it is interesting. But folks, I'm not colorblind. This is blue and this is yellow, and you might be getting just kind of a general idea of what we're looking at here. So this is, if so the anticipation is this. If we're getting a bull flag or a bounce off the bottom, okay, and we're already extending on up, we can see support bounces from the high. You can watch this. Of course, there's a middle range, but a lot of times it's that low. If you break that low, you might want to be a little bit cautious because again, what is that measuring? It's measuring the lows across the entire time frame. Think about it. If we're breaking the average lows, there could be a change here in terms of, prices not moving. I mean, it could be an issue. One more, we're gonna create a scan here as well. But fascinating here for a little bit of the pullback. Now, this is an example of one that we've got right here. We came back down. We actually bounced off that lower end. Now, nothing to say that 20 is going to be perfect across the board. A lot of times even 30 could be interesting on the longer term trends. But for the swing trade, I'm kind of thinking within that range, 10 to 20, somewhere in there. Okay. Breakouts above those levels, pullbacks. Now, we're kind of in a sideways channel. If we were waiting for confirmation to kind of get out of the range, we're probably looking for that upper bound to be hit. above there. Now, what's interesting here is we can still vary. Just because we broke above it one time doesn't mean we're not going to go back down below it, just like any moving average. But if you can start to break above the highs, you're getting a little bit more insight there. Now, this one has been going sideways, many of these after long-term runs, but like right over here, maybe perhaps a support bounce off of a low. If you start to trade above here, that could be what some would refer to as a confirmative move for the breakout. Okay. Just zooming in over here. That's what we saw. I'm just using 6 months charts here, but you can see breaking out of this range here, that really got us going, right? And notice from that bounce, and this kind of highlights my point on a lot of these moves, you're not really breaking, you're testing those lows off of a level. Now, stocks will respond differently to different moving averages. Okay. And they vary a little bit, but park that in the back of your mind. All right. As we go through here. So it's a little bit different, isn't it? Now we're saying get above the average high for confirms. And if you break below the low, you got to be kind of careful with it. You're going to have to probably see it, it didn't bounce off this level. It's below it. So does it need to come back above this high? Well, you might be waiting for that additional confirmation, not just the average price, but the high level, right? It's the highs we're interested in terms of a breakout, at least in terms of this indicator here. Okay, now in the scan tab, we're going to find some interesting ones in here. I did use the S&P 500. I did actually save it. I'm gonna let's build it though, because I want to build it. I can share it here as well with you if I could ever get off that scan query. There we go. Here's my study right here. So under the study, I'm going to go ahead and just click on this and create this for us right now. So add a condition. Let's make this as simple as can be. Now, what's interesting is we're actually looking at the stock price closing above. So the very first level we're going to be looking at here is actually price. And that is the closing price, because we're going to say the closing price is getting above the average highs and not below the average lows. Crosses above, this is where we put it in. The study right there. It's going to be just a simple moving average. Just type it in to find it quicker. And this is what we got to do. We got to do this again and go over here and then still scroll up to find it. It's above the high. Okay. We said 20. I still want to look at a 10 as we go through this. Let me just show you what we've got just here for the last two bars. Okay. What I'll do is there are going to be rare situations where you're not going to, necessarily be breaking above the yellow line, or let's say the lows. But in this case, if you think about it, as long as we are above the high moving average, then we're already above the low. The high will always be above the low. So this is the only one you really need to scan for as of right now. We don't need to scan for others necessarily right now. Okay. As we put this in, because it will already automatically be there. Now, the low, though, can be helpful for the pullbacks, as we mentioned. More on that in just a second. That's it. That's all it is right here. Now, I'm going to scan in. I wanted to show you something because what we'd seen over the past years, I'm talking like in 1999, etc., when the technology market would kind of, stocks, communication services, technology would pull back a little bit. It was actually software sometimes that would actually start to rally back up on the pullbacks. And software's really been beat up, which is so crazy because the same thing's happening again, even under different conditions, like with AI. So there's a little bit of that, but let me just show you how quickly we can run through this. So it's a little bit longer. The S&P 500 takes longer than this, but I will state this: you are seeing some softwares pop up, just like a general theme that we'd seen back years ago, like in the dot-com eras. It was software that was moving up. So here we go in Adobe. So within the last 2 days, we broke above that level. Well, we know software's been down, so could it now be giving us a signal that it's breaking above that high and maybe it's ready to go? There you go, right there. I'm gonna do one adjustment over here. This has been fairly tight. We've had a few of these. The different thing I would say here is when with the 200, I mean the 20, and this is just something that I'm just automatically doing because I've just done this for more than a couple decades, and that is this. We are kind of making higher highs and higher lows. Now, do we know that this is going to go higher here? No, but it did break above this range, and then we kind of closed back down below it. But now we're kind of breaking the range here. You're going to see this frequently happen. If you're taking out the highs, you might be close to a range. Watch this. If I flip this over here to maybe make it more akin to what that stock has been doing, a 30 period moving average, which is roughly about a month and a half, you can see it's getting somewhat closer to that range, still looking just at high levels. We're kind of form fitting it just a little bit here off of the upper end. Okay, there you go. Kind of touching off the top, touching off the top, similar highs, but a higher low. You're breaking above those highs over here, folks. It is unique. It is different as we average in those prices, the highs versus the lows. So you can kind of fit, look and see what trend might line up. There's nothing to say that a 20 is going to be perfect, but in terms of this trending up, which is what we're not doing here at all, I think the 20 would be the largest extent. That's a 40, but the 20 really of the swing trade time frame, the shorter term could be interesting. But this broke the 20. This is breaking the 40. You can see it right here. Okay, let's hit a couple more. ADSK. Yeah, what else do we have in here? I've seen that one. Intuit and Workday. Okay. INTU. There you go. So just barely above the range. WDAY. Like I said, it's breaking the highs. It's different. And with that, are there any additional price confirms over here? That's the real question that we want to look at. Is it breaking the highs? Are you seeing any other chart indications? A very, very simple approach, though, that can be very, very insightful nonetheless. Okay, now I'm going to do this. I'm going to reverse this back down, and I'm going to go back into, oh, not this one, right over here. Let's go back to our a shorter term time frame. I was going to look at actually, we can start off with a 20, but remember those other areas that we were looking at, like say, for example, healthcare, that was moving on the sector chart. I wanted to look at that. So I'm going to go into scan over here, and I'm going to flip this from the NASDAQ to the S&P using that sector strength that we saw earlier. And let's just go into industry here. And now let's look at healthcare because it has begun to move. What's moving within this group? This is one way to do it. We could click like this. Wow. Healthcare, is it moving? Might we see a bigger move if the market in technology comes down? Yeah, we could. These have all broken over that 20 in the last 2 days. So it's not like within 1 to 2 days. So it's not like they did it 5 days ago. It's like it just happened. Okay. So now we're tying this in with an additional confirm on a sector weekly potential rotation. We didn't look at staples, but we did look at healthcare. But these two were kind of interesting here. So is it a big enough move? Is it closing above average high levels? Turns out we've got a few that are. We'll go back to it right here, but this is it. So what I wanted to do is, let's say, for example, so CAH, I'm gonna look at, oh, so you got Johnson & Johnson as well, Merck. Yeah, Stryker, so healthcare equipment. So pretty much across that, it's pretty broad range within the sector, a number of industries here, sub-industries. CAH, Cardinal Healthcare. Okay, so there we go outside of this range right here. Okay. And by the way, I have to say this, some pretty good, wow. So the money flow on this one, pretty strong relative. You can see there's some good volume coming in here. We've actually it looks like just barely tested or broken above these highs. When we do that, again, remember, we can draw our attention to this and saying, well, we're already above this level right now. So according to money flow, breaking above this level, is that enough confirmation for us? Well, perhaps, but could start to flag here again. But that is a level, according to money flow, that we should reach because we're already there. There's been a lot of buying. So I don't know if so this is an interesting way just to see what's been happening over the last week or so as technology's kind of flattened out. Now, this is a longer term move to the upside. It really is. It's quite long. And there you go. So that's interesting um, on this. Now, one of the things too, it's shot up quite a bit from this line, but could we start to maybe get the move to start to go here? That's the question. So we could be watching this over a period of time or whatever it is. But what I've been teaching, showing everybody as of late is you can still use something like this if you wanted to. And by the way, there's a good support bounce right there off of long term, really a gap up, right? That's a big gap to the upside right there. I mean, that's kind of like a weekly gap, and that is earnings right there. Now we are past earnings again over here too, right? We passed earnings. So we don't have that to worry about over this time frame, but watching this, and just waiting to see if we do get another flag or other indications from the sector bounce, we could start to maybe sell some short puts down through here as well, just to kind of watch this. One thing too is if you get a big enough pullback like this, sometimes those put values, the put prices can go up. Well, obviously they would go up, generally speaking, if prices are going down, stock prices are going down. But implied volatility could also help to strengthen those premiums as well. So there's the bounce. Now it could continue. We're not sure, but this is one we can kind of look at. I want to highlight this one too. Well, let's hit a couple more as we go through here. See now, Dexcom's been down for a while. That's interesting. They do those patches for diabetes, for diabetics, DXCM, and let's look at J&J and some others here too for bigger reversals. So that is J&J. You can see the pullback just barely getting above these highs right now. It's going to be interesting to see, if this can kind of base and go higher here. In the meantime, at higher levels, yeah, the possibility of a short put sort of strategy. There's Merck. It's not quite there. I think it's close to, maybe closing above that upper channel line for that additional confirmation. I want to see DXCM though. Okay, so that is a much, much sharper move. Actually, on the flip side, that's three soldiers up, just three big bars to the upside right there, closing above a high right here. So remember how we found this, just a simple scan closing above over the last couple of days. On a lot of these too, if you are getting above the highs, do this for me. Go ahead and just look for that downward sloping trend line. I didn't draw that perfectly, but I can tell you that that downward sloping trend line, folks, that did break, and that could be one to be watching for. I mean, just in general, not necessarily this stock, but like stocks like this that are breaking out, breaking the downward sloping trend line with some good volume and good strength. Wow. I mean, is this going to start to bounce back up now? That's the question. And if we have a bigger pullback in the market, it might. Um, all right, let me see. I'm gonna take a look at any questions that we might have here. Where did you get that marker to write on the chart? Oh, that marker is just simply a set of tools that we have uh, that are built in. And by the way, we have kind of a built-in one that we're using here, but this is that comes with like what we have on our end. But you can get those like online as well. You're referring to this, yeah, where you can draw different things. I haven't even used all the tools on it, but there's quite a few that could be used. Good question. Those are helpful. Built in though, of course, you have the Thinkorswim drawing tools as well. All the different colors you can type text, etc., on the chart as well. This video can be found. It is recorded. Oh, yep. Okay, Ben got that. Okay, very good. All right. Here's one. Just as a review, somebody mentioned. So there's a ServiceNow. That's software. Okay. Now the funny thing is here, I did a 2-day look back period. ServiceNow, you can see we broke right down there. And after that, we actually had a pretty interesting rally too. Now, the one thing I would say, do this again. Take your trend lines, draw those. I think in many cases, when you're getting above the highs, the high average, you might be breaking that trend line. So keep an eye on that. If you're breaking above the longer term trend line, well, what can happen first? You break the trend line, oftentimes first. Number one, trend line break. Number two, trend change could happen. That's what can happen. The reason why you're breaking that trend line is because, following the trend down, this connects very, very nicely here. I'm trying to connect it nicely. I'm not doing such a great job, but you can see this longer term trend line on this service now. It's bouncing, bouncing. Why are we breaking the trend line? It's because prices had been going lower, but they're beginning to flatten out. You can see what happens. That trend line break can be a sign. So this is kind of like a trend line break indicator in a sense. In many, many ways, you might see that. Off the bottom, trend line break, and then the trend. And so you can watch for reversals here. Very interesting. Now, this is one off the bottom. Why don't we just start with one off the bottom first here as we kind of look at it. Now, we might not see like the perfect flag pattern that we look for in this class or an inverted head and shoulders pullback or a cup and handle. We look at a lot of these different ones. But what I still want to do is I want to view these out going out into next week and whatnot, where potentially we can add to it maybe on the long side if it does give us that sort of a signal. By the way, it's kind of like crowded over here, but you see the 100 fitting in there. We just broke above the 100 level, which, by the way, as we said before, keep eyes on these big round numbers because that was support, it became resistance, and we just took it out, so therefore it could become support again. But fascinating, price is down. What happens to puts over here? Well, they could be going up. So we're going to do a swing trade time frame going out just 1 month. Let's do a couple of these right now. Get these under our belts as we look at it. Let's start off with now. Okay, on this. This is one like towards the bottom though. So let's do it. We are past earnings, which is interesting. I'm going to go over here, and what I want to do is I'm going to go in, and I've got a lot of contracts over here, but let's just say, for example, this lower level, it can act as support. We're right around 90. That's a 10-point move. Where does 90 fit? Or even 85 is below this level. 80 is below the entire range. Don't be surprised with a big pullback like that you still might be getting some premiums on these higher price stocks. So there's your 85. I might look at an 85 and maybe do, um, well, we could look at either a short put or a short put spread on something like this. It is at 85. Um, you know, look, let's do this. If I click on the bid here, the delta there is actually really, really low. Now, why would I be going so low on that delta? Because the trend is down. Now, we have a trend line break, but it's been down for a while. And that is kind of an expectation of about a 13% expectation it'll meet that level. Again, though, the delta is noted for a $1 increase in the underlying stock. The option will be impacted by the delta. These are puts, and so that would move about 13 cents against it. So if I just said, let's just do this for an example. Here's the mid-range. I put the mark in here so we can see this. The mark is at 35, 135. What does this look like over here? Well, its buying power effect is $850. You can see the max loss right there is 8,300 and change. And that's if, we get assigned um, the shares and the stock goes to zero. Okay. Um, not a likely thing to occur, you'd have to say, especially over a month's time frame, but we want to say that that is the max loss. There's your credit right there. Now, if I were to change this just a little bit, let's just look at the 85. Let me do this. I'm going to hold the control button down and then click on the 80 to buy. So notice we just created a spread. So a bull put spread. Now the credit is one. It gave us, that's not right. It's just not going to be, I'll do it right now if that's the amount, but it's not. So let's go over here. Let's click on this and then click, I'm holding the control button down, clicking on the bid, and then the ask for a 5 wide over here. It's 57 cents. Now, the spread on this, though, you can see over here, The buying power effect is still 443 versus 850. If I did two of these, it's still that, look at this. We're still not even at the same level. Now we've lowered though our max loss potential, of course, but buying power effect is actually a little bit higher even with the smaller credit. I'll tell you what I'm going to do. I'm going to go for the 135, just the short put as an example. Um, something to watch here still, giving it a buffer zone, but before between where it's at right now, because it's up about what, 17 points above that, 17, almost 18 points above that, $17.85. I'm gonna go ahead and click over here at the 85. I'm gonna go for the 30, the 130 right here, okay? But I want to do this too. So I'm gonna right click and let's just go to a sell custom with a stop. I'm only willing to go on this trade two times the max potential. So if I'm able to make 135, let's do two times that 135. So if I'm wrong, I'm only losing what I stood to gain in the first place, right? I mean, we talked about stops. Those stops aren't guaranteed at that price, but we're trying to get out at that level earlier before it makes too big of a dent if it just goes against us. So, we could just say like 270 to 70 on the upside, for example. And that would be, I'll go, go till cancel here, make sure we've got that in place. But does that make sense to everybody? I've got to make sure I pull up. That's going to jump up now. So I'm going 135, but I'm just going to say this is excuse me, 270 right there. I'm only willing to risk kind of a 1-to-1 on this. There are other ways to do it around a support drop. And by the way, you could always try to exit earlier if you thought it was going to drop further. But this is one off the bottom. We can do bottom. I want to do another one off the top here in just a second. But that's what we're looking at right there. Okay. So make sure you go through your order dialog box, but that's fascinating. So the buying power effect, 850. Of course, this is higher, but we don't really have an intent of writing it all the way down to zero. I mean, some traders might try to get out before then, for example, and there is your 135. Okay, so I'm going to send that through the mid-range right there on this one. Now, this is part of a trading strategy. This is strategy. We're getting some interesting indications. This did give us the trend line break indication. Okay. And software, like we said, traditionally can bounce up. We're seeing some interesting moves in here. It's been down for a while. But with all that, we're saying as it's kind of maybe showing more indications that it might go up, we're waiting on that. We're trying to still take advantage of what we're seeing right now. If a trader was seeing this and trying to collect income over that time frame using that 1 month time frame that we just looked at here under June. Now let's flip it around. Let's look at one that's been showing momentum more on the upside, still uh, with Google over here. Okay, so what's interesting here is we've broken above that range clearly, and another thing we're seeing with that clearing of the 20 high, we're above our range now. So you see that break, that gap up? There's a gap, and we've been going flat and we're still staying strong. Now, as somebody might be waiting for a bounce off this level or a breakup, they still might say, I'm seeing some strength. We're past earnings. Let's go down to this level here. This is a big gap up. There could be some support through here. Where else could the support be, folks? I've been doing a lot of talking here. Based upon what we looked at, where might we also be seeing support? On a move like this, where we could have a bull put spread, for example. Where do you think we might see support at? I showed you on the chart the gap up, right? By the way, folks, if you're getting value out of this discussion, smash that like button. Lets us know that you're getting tools, you're getting insights here that could help you, just inform you, educate you is what we're talking about here. And there we go. Any comments on that? What do you guys think? Seeing maybe a couple of areas where prices could bounce. They did it over here too. lows, even the highs. We're above both currently, so there might be just a few levels of support, support, and support again. 360, interesting. What if we did look at a 360? Let's just do it right now. Where is the 360? Right there. Okay, now I'm going to look to do a spread on this over here, and let's just see what we get on the 360 over here. Now that represents right there, kind of towards the lower end of that delta that we look at sometimes, right around a 20. So let's go ahead and look at that one. Okay, so there's the 20, and let's just do this one more time. So that was about the 360 range. Giving us this level, let's see, 360, yeah, right there. So about 19, 20-ish. Click on the 360. You can see much more kind of pricey over here. 4,000, it's expensive stock. Close to 4,900. I'm going to right click, hold on the 355, 77 cents. Now it's nowhere near this level, but on a per contract basis, what does this look like? I did a couple actually. So there we go. So it's 154. We're getting close to those deltas that we had previously on now, but we've clearly lowered our loss potential over here. Okay. Now what I want to do here is I want to set up something very similar to this. Um, actually, yeah, we still can. So let's go over here. I'm going to go ahead and just do, you can't see it because it's off the screen, but first triggers sequence over here. And what I'm going to do is I'm going to right click and I'm going to create an opposite order to buy this back. Okay. To buy this back at a level, and I'm only going to do in this case, since we are making attention, trying to make 77 cents over here, just do this every time. I mean, well, if you want to kind of try to measure this out a little bit, 77, we know where this is going to be. Oh, 154 right there. So $1.54. What are we willing to risk on something like this? We're going to try to buy this back, right? At that dollar, let's see, dollar 54. Okay. Guys with me on that? We're doing the exact same thing here as we set this up. Got to put it as a stop though. Okay. So that's this setup. Let's take a look at it right here. All right. There is your 850, 846. 54, you're getting everything set up over here. There was a question that came through as well. Let me just hit this too. Um, here we go. Yeah. All right. Sounds good. Let's take a look at this. Oh, let's see. Let's see. The question comes, diagonal line tough, previous highs and lows inside gap. Um, Yes, we are buying that back. Yeah, we're closing that out. In fact, not at a gain, but if it goes against us. So we'll be looking to gather the majority of that move, right, as prices come in. So we're trying to gather if it goes against us if it were to work against us. We're actually just putting in like a potential stop to close that trade out, right? If it works against us to the 1-to-1 margin, right? If it goes up by that 77 cents, for example, on the other direction. That's what we're talking about there. Does that make sense? Yeah, so we're doing it a little bit different here. We're saying that like we're willing to take it as prices, because okay, so it's different maybe from what you've seen from some of the other coaches. We're saying that we're going to put a limit on there so to buy it back in case it works against us, right? So it's not necessarily a set it and forget it at this point. We're saying just like we did on the short put, if it goes against us double the amount, we close it out. As long as it keeps dropping down, that's fine. That's fine, right? We can close it out any time. So it's a different way to look at it. We're just kind of controlling our risk there, even on this aspect of it as well, right? Does that make sense? So just some thoughts, just some thoughts. We could do it either way. Anyways, some of you don't even put the stop in. But or you look to close it at a lower price, right, as it works in your favor. But what if it works against you too? Maybe you don't want to take the full loss. What was the full loss? We looked at it. It was up in the 700-800 range. So just some thoughts in there. All right, everybody. Well, be sure to subscribe to our Trader Talk channel. Love to have you guys on board if you're not already. And again, give us a like. Just giving you some different ideas and showing you there are other ways to maybe pick up on those longer term trend line breaks, breaking above highs for additional expectations for the move. On that note, thank you so much, Ben, for your help in the chat. Take care, everybody. Great to be with you. See you next time.